All right, here goes a trading wrap up for the day. 10 for 10 since I started day trading full time again. So all green days, another solid one here. As you can see, what was the profit? 918. And basically, profit loss on the day 355 on these ES, that's the S&P 500. Futures contracts, let's see, a couple small losses on this stuff. Lost $55 on Meta. That didn't work out. Made 257 on Merck. Caught a little bit of a bounce. They were down pretty good from earnings. Made 300 on Netflix. So I was fading that when it was over 1,000. I felt like that would have been a good play. That worked out. The best play I thought I had that was on my radar that I was trying to play a lot was Palantir from their earnings that blew past 100. I did fade them a little bit midday, but they never quite went as low as I thought. And a lot of times, like these earnings runners will keep running, but you usually will get back tests of certain levels that it didn't quite do. So anyway, I'm happy to be 10 for 10. The streak continues. Trading pretty disciplined. I got my trade journal. Obviously, nobody trades perfectly, but more or less, I did follow all the rules, and it was another nice day, man. It all adds up. Somebody from my last video was asking, by the way, to hit that kind of number, like what kind of account I'm trading with. Well, this is a $30,000 account, and I recommend this for people to day trade with. I mean, they may not even have a choice to even trade bigger. But the reason I mention that is because you need at least 25,000 just for the PDT, the pattern day trader rule in a margin account, which you could technically trade in a cash account. But honestly, if you're day trading, you need and should have a margin account. And if you don't have at least 25,000, you're limited to 3 round trips, 3 day trades within a rolling 5-day period, which severely limits you because most people put in well over a dozen trades in one day. So you'll be coded a pattern day trader. You'll be very limited what you can do if you have less than 25. So the reason I mentioned 30 is to have the 5,000 buffer because, for example, if you just left the account at 25,000 and you lost $100 for the day, so your account's opening at 24,900 in that scenario, you're not allowed to day trade because you're under that 25,000 limit. So if you have a little bit of a buffer, and you shouldn't really risk more than 2% on a trade, meaning a $30,000 account, you're risking about $600. Even if you hit, 10 bad trades that all hit your max limit, that would basically be actually that'd be 6,000. So even if you hit 5 that hits your max loss limit, now your account's down to what, 27,000. You still got a buffer. But obviously anybody could get in that position where they're just on a string of bad trades and bad days. But having that 5,000 buffer is always a good thing, And if you're one of those traders that like to scrape everything off the top, for example, you're up $1,000 for the day, it's at 31, scrape it off the top. Because at the end of the day, look, man, you really only need like that 30 because your buying power on marginable securities, which are most securities, is going to be 4 times what you got in the account, if it's cash. So you would have buying power, day trade buying power of $120,000. Now, obviously, that's for your regular marginable securities. If you're playing some triple leveraged fund, you're not going to get 4 times buying power on that because you're basically leveraging yourself 12 times. So, but on regular marginable securities, you got 4 times day trade buying power. Now, in that scenario, you got $120,000 you could play with during the day. Trade with is actually the term we should use. You could say it's a game, but we got to treat it like a business, right? So we should use the right terminology. So you got 120,000 of buying power you could trade with. If you traded with like $150,000, you're going to get a day trade call, and you got to put more money in your account. Otherwise, you get restricted. Usually have $5 or 5 days trading days to put more money in the account. Otherwise, you're limited to 2 times day trade buying power. Meaning, if you had 30, you can only trade with 60,000. And if you didn't put in the money that you should have, because you shouldn't be trading with 150 if you have 120,000 worth of buying power, then your account will be restricted for 90 days if you don't put the excess, the extra, the short funds, the funds that you were short in that account. So there's so many rules to this that you could go on, and it could get pretty complex and, quite frankly, a little boring. Just some platforms, by the way, will help you keep tabs if if you got $110,000 of trades open and you try to open another like 40 to get up to 150, depending on the brokerage firm, it might say, hey, look, if you open that, you got to hold that overnight, that new position. So remember, like in this scenario, it's 120,000 at a time. So I could open a trade for $80,000, close it, open a trade for 100, close it, open a trade for 60, close it, open a trade for up to 120, close it, open a trade for 30, close it, etc. As long as you're not opening a trade for 60, opening a trade for 70, then all of a sudden I'm at 140 total in combined open trades. So just be careful with that. But anyway, I'm happy overall, 10 for 10. So the streak continues. You guys have any questions about day trading or anything else? I'll do a future video. If this video gets enough likes, make sure to hit the like button, subscribe to the channel. But if I could get 100 likes on this video, I'm going to go very in depth how you can actually find ways, kind of like a workaround. It's not perfect, but it'll work a lot better than what your regular broker would tell you. But kind of a workaround if you have less than $25,000 to day trade with. Basically, if you had like 5,000, like what can you do? There's actually a couple of good little things you could do to help you get over that 3 round trip rule in a 5 rolling day business period. Anyway, subscribe to the channel, guys.